Two companies connected to the AI economy are trading for less than $5 per share. One builds semiconductor technology that moves massive data between machines. The other uses AI to analyze millions of legal documents for corporations and law firms. Yet, while the global AI race is creating trillion-dollar companies, these two are still trading at roughly $1.54 and about $4.20 per share. Now this is where things get interesting. Most investors are focused on AI models and GPUs, but behind those headlines is a completely different layer of the AI ecosystem: infrastructure, the systems that actually allow AI to work in the real world. So the real question becomes, are these simply overlooked small-cap tech stocks, or early infrastructure players the market hasn't fully noticed yet? Let's take a closer look. AI isn't just software anymore. It's becoming a global infrastructure race. Companies across multiple industries are investing heavily in data center networks, AI automation platforms, advanced semiconductor connectivity, and enterprise data analytics systems that allow artificial intelligence to operate at scale. But here's the part most people miss. Investor attention usually goes toward the companies building the AI models or selling GPUs. Meanwhile, the companies operating inside data movement, enterprise analytics, and other infrastructure layers of the AI ecosystem often receive far less attention. This is exactly where pricing inefficiencies usually exist. Historically, these are the types of technology layers that institutions quietly watch long before broader market awareness appears. Now, this doesn't guarantee anything, but it helps explain why certain small-cap companies inside the AI ecosystem sometimes become relevant later in the technology cycle. And this is exactly where smaller-cap opportunities tend to form. Imagine AI systems processing massive amounts of video data, machine vision inputs and sensor information, self-driving vehicles, advanced robotics, smart manufacturing systems. All of these environments require something extremely important: high-speed data connectivity. Machines need to transmit enormous volumes of information instantly between cameras, sensors, and processors. But here's the catch. Moving that data quickly and reliably is actually one of the biggest engineering challenges in modern AI systems. And this is where things get interesting. One small technology company has built specialized semiconductor solutions designed to move high-speed data across complex systems. And later in this video, we'll look at another company tackling a completely different AI problem: enterprise legal analytics. Machine vision systems, autonomous technologies, and advanced robotics all depend on extremely fast communication between devices. Cars need cameras to communicate with processors. Robots need sensors to send real-time data. Factories need machine vision systems analyzing production lines instantly. If AI adoption continues expanding across these industries, the infrastructure moving that data becomes critical. Because if this layer expands, companies building those connectivity technologies naturally become more important. And the stock itself has had an interesting journey. At earlier points during the broader semiconductor cycle, shares traded significantly higher as demand for connectivity chips increased. Then the stock pulled back as the overall small-cap technology market cooled. Today, the company trades around $1.54 per share. So now the question becomes, if AI systems continue demanding faster data movement between machines, could companies building that infrastructure regain attention? The company develops semiconductor solutions used in high-speed connectivity environments such as automotive systems, machine vision platforms, and advanced networking applications. Its technology focuses on transmitting large data streams across systems efficiently, a key component in many AI-enabled environments. And when you actually look at the company behind this technology, you find Valens Semiconductor Ltd, ticker VLN, currently trading around $1.54 per share. Now, obviously, this doesn't mean the stock suddenly moves tomorrow. Semiconductor markets can be cyclical, and smaller chip companies often take time to scale. There are real risks here, but the reason companies like this remain small cap may simply be that the broader market is focused on the biggest AI chip providers, and timing is often the key factor. Now, before we get into the second stock, here's something most people completely overlook. Even though AI demand is exploding globally, many infrastructure providers still experience delayed market recognition, and historically, those delayed reactions are exactly where smaller cap opportunities sometimes appear. Which brings us to the second company. But unlike the first company, which focuses on AI hardware infrastructure, this second company operates in a completely different layer of the AI economy: enterprise software. Specifically, AI systems designed to analyze massive legal document datasets, where the first company helps machines communicate. This one helps professionals process huge volumes of complex information, and this is where things get interesting. Legal teams often deal with millions of documents during litigation or investigations. Reviewing that information manually can take enormous amounts of time. AI platforms can now analyze those documents, identify patterns, and surface key insights much faster. That's exactly the type of system this company builds: AI software designed to help lawyers and organizations process complex legal data more efficiently. If AI adoption continues expanding inside enterprise software environments, platforms capable of analyzing large information datasets could become increasingly valuable, because AI isn't just transforming engineering and robotics, it's also transforming how professionals process information. This stock has also experienced volatility. At earlier points during the legal tech growth cycle, shares traded significantly higher. Then the stock pulled back as technology valuations cooled. Today, it trades around $4.20 per share. So again, the question becomes, if AI continues reshaping enterprise software, could platforms like this regain market attention? And this is where it gets interesting, because the company behind this AI legal analytics platform is CS Disco Inc., ticker LAW, currently trading around $4.20 per share. Again, this doesn't guarantee anything. Enterprise software markets are competitive, and smaller platforms must prove they can scale. There are real risks involved, but the gap between AI adoption inside professional services and investor attention towards smaller companies may explain why businesses like this remain relatively overlooked. So now, we have two very different AI infrastructure stories. One focuses on semiconductor connectivity powering machines and sensors. The other operates inside AI software designed to analyze legal data. The first benefits if AI-driven machines, robotics, and autonomous systems continue expanding. The second benefits if AI becomes more deeply integrated into enterprise software and professional workflows. So the real question becomes, which type of AI infrastructure expands faster? Hardware connectivity powering machines, or software platforms helping humans process information? That tension is exactly what investors often evaluate when looking at emerging technology companies. Stepping back for a moment, both of these companies represent layers of the AI ecosystem that don't always receive immediate attention. Not the models, not the headline AI companies, but the infrastructure layers supporting them. Historically, these layers often move later in technology cycles. But when adoption expands, they can sometimes move more aggressively as the market begins pricing in their role. And this is exactly the type of layer institutions quietly monitor. Because sometimes the most interesting opportunities exist in the parts of the AI ecosystem most investors overlook first.